In this video, we're going to go over the breadth indicator. It is a good momentum indicator, meaning that's good at predicting the direction of a price movement as well as the strength of that movement. We're going to look at the equation. It's a very simple equation, and then we're also going to look at some numbers to look for when trading on the stock market with this indicator. Here's the equation for this indicator, also known as the breadth advanced decline indicator. Z is going to equal the breadth, and then A is going to be the stocks advancing over a 10-day moving average, and D is going to equal the stocks declining over a 10-day moving average. To find the number of advancing and declining stocks, I like to go in the Wall Street Market Diary. Each trading day, the market diary is going to list the number of advancing and declining stocks on the NYSE. If you see here, this is the number of advancing and declining stocks for December the 31st. This line right here shows the stocks that advanced, and basically what this is stating is that 1,881 stocks had a higher closing price on December the 31st than the previous day on December the 30th. This line here is the declining stocks, and this is 1,268, and basically it's stating this many stocks had a lower closing price on December 31st than on December the 30th. To get an archive of these numbers, you'll have to subscribe to the Wall Street Journal. But if you're frugal like me, make a habit of cutting and pasting these numbers each day into a spreadsheet so you have access to them. For our example, we're going to calculate the breadth advanced decline for December the 31st, 2020. To do this, we first need to calculate the 10-day moving average of advancing stocks for December the 31st. If you look on the left column here, these are the number of advancing stocks for December 31st and its 9 preceding trading days. These are the values that will help us calculate the 10-day moving average. The moving average is simply the mean of the values under observation. So we're going to add all these values together and divide by 10, as there's 10 separate values. This will give us the number of 1,669.7. This value is the moving average of advancing stocks for December 31st and will be represented as A in our equation. Next, we're going to calculate the 10-day moving average of declining stocks from December the 31st on the NYSE. On the left column again, we have the declining stocks from December the 31st and 9 trading days to December the 17th. We're going to do the same equation, the moving average. So we're going to add all these numbers together, divide by 10, and what value we get is 1,468.7. This is the moving average of declining stocks for December the 31st and will be represented as D in our equation. Now that we have the 10-day moving average of advancing stocks and declining stocks for December the 31st, the equation is fairly simple. We're going to take the 10-day moving average of advancing stocks and we're going to divide it by itself plus the 10-day moving average of declining stocks. In our example for December the 31st, we had 1,669.7 for the 10-day moving average of advancing stocks, and we had 1,468.7 for the 10-day moving average of declining stocks. Both of them add together will equal 3,138.4. So we're going to take that number and divide it into the advancing stocks, and what we get is 0.532. This is a breadth advanced decline amount for December the 31st, 2020. So what does this number mean? Basically, the higher the number, the more likely you're in a bull market. That's because you're having more advancing stocks than declining stocks. A good measure that I use when trading is to buy long when the number is over 0.659, and then to close out long purchase when the number falls below 0.366.